Love it. Love it. Okay, I've got go live and here we are. And we're live. So guys, welcome to the show. It's Novak News, Belinda Chu, Mark Novak, two very different agents, one female, one male, but both in different parts of the market. So the thing that I love about your experience, Belinda, is you've been in the, what do you call that world?
I used to come from equity markets. So
Yep.
I worked in investment banking for a very long time, for 12 years. So there's a lot of synergies between investment banking and real estate. So I said the main synergy is really all about that growth and value, whether that's a portfolio in stocks. So
Yep.
you're investing in blue chip stocks like the ASX, or you might be investing in what is called a blue chip property.
So we do it in property, Belinda, we do it very differently. We seem to be very touchy-feely, whereas in the equity markets, it's very analytical, by the book, what's the market been?
Yeah.
Like you can actually monitor it to the dollar, to the cent, to actually exactly how the assets performed, whereas real estate is very not that. It's very...
Yeah, it's all about relationships.
That's interesting. It's really, really interesting. So the property market at the moment, and a discussion we've been having lately, guys, particularly because Belinda comes from that analytical background, is just how, properties have actually performed. Because I think being a home for a lot of people and being an investment that you just sort of lose track over for a lot of people, like, a lot of our landlords have owned their properties for 10, 20, 30 years. You sort of don't monitor as heavily as you do with equities or commodities or things like that. Like, you don't sort of open up the newspaper every day and go, and then
there's no index to see how your stock is performing.
Yeah.
You can do that on a paper. You can actually check your funds online. There's so many things you can do with that. But in property, you can't.
No.
Unless you call an agent for a health check on your property.
Gotcha. But, even just to get, because that's so much data and so much information that you can aggregate and enjoy. But with property, you don't really, unless you're talking with, a great thing about social media is because it's actually allowed us to get the message out there on the Northern Beaches, Sydney, Australian property market, whereas that was pretty hard to dig up anywhere else. So I think part of tonight is a little bit of that discovery process to take everyone through some facts and figures of what individual properties have done on the Northern Beaches, where you can turn around and go, shit, pat on the back, what a great, I'm really happy that I've invested in those markets.
And just raise awareness about what a cycle really is.
Got it.
Which also happens on equity markets. So there's always a cycle. What goes up sometimes has to come down, and vice versa.
Now that cycle is pretty scary. That cycle, it seems to be in a stock market crash, it's pretty scary. In a property crash, we never use that word. That's a terrible word. But effectively, it's the same thing.
We haven't had to use the word property crash in Australia for quite a while. And I wouldn't call what was a dip last year even anywhere like a crash.
Well, the stock market crash can halve the value in the stock. So you can have a Telstra stock that's worth half, or you can have a stock that's 50. But we haven't seen that in property, have we?
No, and in property as well, if you're an investor, you're still earning rent.
Yep.
So there's still the rental component side of things.
That's interesting. So in a stock, will you get yield, or will you get almost like a rent out of the stock?
You could buy some stocks where you're guaranteed dividends, but then equally you could buy risky stocks where you'll gain no dividends if they did really poorly that year.
Got it.
Right.
Okay. So let's go straight into property. Now you've got a pretty serious agenda. Whenever I do anything on social media, it's quite loose, and we sort of go with the flow. Belinda has notes and lots of them. So she went and did a talk before on camera and blew me away. So what do you want to talk about?
Well, I just wanted to talk about commercial real estate just for a while, because I think we don't raise it enough.
Yep.
So the commercial market hasn't had that.
Can we qualify ourselves a little bit? What do you do for a job?
I'm a commercial sales and leasing agent.
Yep.
I do also do some residential properties, but I would say the balance is probably 80% commercial, 20% residential. That's what makes working at Novak so great, because you get to work across platforms.
Yep, we're blended.
Yeah.
I don't know what I do.
He's the boss. That's all he
I've
needs.
sort of been trying to work it out. So
He pays us. That's all we need to know.
I think that's it. So I've been an agent for 27 years. I have stuck to the Northern Beaches the entire time. Fortunately, my father was a real estate agent for almost 30 years. So there's almost 50, 60 years of real estate in our name and in our brand. So hopefully us talking where we know our stuff a little bit more than the average bear, and that's what we're going to share with you tonight.
Yeah, and we just want to educate our audiences. So whether you're a seller and you're looking to sell your property, whether that's commercial or residential, or whether you're a buyer and you want to make that first purchase, a commercial purchase or a residential purchase, what we want to do is try and educate and raise awareness about properties so that when you do go and make your purchase, you're a little bit more aware and feel a little bit more confident about what you're doing. And that's really what we're here to do.
Got it.
Yeah.
Let's talk juicy stuff.
Okay, so with commercial real estate, I think in terms of the market, it definitely hasn't had that big boom that we've had towards the end of the year with residential, which I know Mark will cover shortly. Yep. But I think some of the things that you could look at, hey Glenn. Hey Glenn. But one of the things that you could look at is there are still going to be obvious factors and obvious commercial real estate that will still be in high demand.
Yep.
Okay. So the things that, and they're not dissimilar to residential. So you don't have to be like a specialist commercial investor, right? So let's just put like one of the key factors I'd say is location. That will be the same for a residential property. So this is irrespective of where we are in the cycle. These commercial properties will still be in demand. Why is location critical? Well, because if you're doing a retail property, you need maximum exposure, you need high foot traffic, you need somewhere like for us in the Northern Beaches, like Pittwater Road, where you've got 40,000 vehicles that pass by daily. So something like that for a retail shop, you can't get the same property. You could get any back street, but you can't get that property.
Are you scared about buying on main roads now because a lot of them are vacant in DY and Brookvale?
No, because those guys are waiting for a zoning change, and that's a whole different ball game altogether.
Yeah, it's big time.
Yeah. So just because they look vacant as well does not mean that there's no interest in people wanting to tenant them. Sometimes it's just because they're actually on a month-to-month and a short-term lease, or they've got a demo clause in it.
Well, the city could be, their owners are often sitting on a gold mine, but it doesn't look like it. But they are, because if they get the zoning coming through, that is massive. Get 6 stories of units on a little block. It's great.
Yeah, so therefore, if you do find a commercial property that's on a main road where maybe zoning hasn't been changed yet, there's a potential it may be. And if there isn't, you're still going to get lots of tenants wanting to tenant it, or people, owner-occupiers wanting to buy, especially for retail, because of that maximum exposure.
Okay.
Yeah. So
buying property, the two fundamental reasons people would buy a property is to have a roof over their head. There's a couple of different reasons, but one's a roof over your head. 2 is a roof over your head business. So roof over your head business.
To grow your business.
Roof over your head home.
Yeah.
So it's a combination, number one. But there's also that element which we can't help to look at. We do a lot of investment stuff off the plan, obviously the commercial, the residential, property management. The other component is to make money. Now, the people that have a roof over their head or a roof over their business still want to make money, but their motivation is probably 1 home or 2 home of their business, and then after that, it's making money out of the property. But then there you get your investor-only type of person. They're not going to occupy the property. Yeah. They're going to make their money 2 ways. They're going to make their money from a yield, which is a rent, which is a weekly, monthly, annual dollar that comes in.
Yep.
Then they're going to make it from capital, which is the value of the property going up.
Yeah.
So with commercial and with residential, when you're looking at rent and when you look at a capital going up, they're different animals. They act differently, don't they?
Yeah, they do.
Tell us.
Yeah. So the higher, it tends to be in commercial anyway, the higher your yield is, your net yield, and we always talk about net, not gross, you find that your capital growth may be reduced when it comes to just a cycle of a 10-year cycle.
Yep.
Yeah. So generally, the lower your net yield is, you find that the capital growth is higher. And where does that lower net yield come from? They're generally freehold properties.
Okay.
Yeah, they're freehold
So
properties.
freehold, they're not in a big block of units, or they're not in a big block of.
They're not strata. That's what it
They're
is.
just
They're not strata. They're
standalone.
not in a complex. Yeah, they're standalone. However,
Also known as Torrens title. Torrens title.
yeah.
Yeah.
Yeah. However, when it comes to freehold, it does mean though, just like a home, right? If you buy a house, if it's a freehold house,
Yep.
The chances of that land appreciating is going to be higher than you buying a unit.
Yep.
So to me, I don't really see the difference. It's it's pretty much the same, really.
Okay. So give us some examples of making some money out of your property.
For commercial.
Resi, commercial, whatever you
Okay.
like. Let's have a look at some real examples, because it's all great for us to talk around and say, like, it is so good, it is awesome, it does really well. Now, the future is one thing, the past is another.
Mhm.
There's no guarantee that if it's performed well in the past, I sound like a superannuation super company, the how it's performed in the past is going to perform well in the future. But over the last 50 years, property value has doubled every 10 years, sometimes 15 years, sometimes 5 years, but it's doubled. But on average is about every 10 years it actually doubles. So have you got some examples or proof of that?
Okay, let me get to commercial first. My second point, right, which is now related to what you're saying, it's really low supply, high demand, right? So we always hear about this, Sydney, not enough apartments are being built, not enough new homes are being built. So there's that low supply and, higher demand, people coming in, wanting to live in Sydney, etc. Now, I'll just pick up some commercial examples here. So now in the Northern Beaches, we are very acutely short on industrial stock. So what does that mean? So we're talking about warehouses, factories.
Just want to say hi to Michael, hi to Glenn, hi to Lisa and Florence. How are you? Ian, how are you? Guys, any questions, shoot them across. We're reading. Sorry.
Yeah, sorry. Can you see I had to stretch it? I really need glasses. But anyway, my age is showing. So it's all about that low supply, high demand. And so especially here in the Northern Beaches with commercial, really that most acute shortage is coming from industrial stock, which is warehouses and factories. And so I've got some concrete examples. So for example, we listed a property 411 Ada Avenue. Last month, 3 weeks ago, we listed it and it sold in 5 days. It was exchanged 5 days, right? And it's just because in the Northern Beaches, and I'm using the Northern Beaches as an example because this is where we work, this is our local community, but we have a huge shortage of space and land anyway. And if we did, we're not going to be building warehouses on them. Yeah, but that doesn't stop the demand for warehouses. So somewhere like Brookvale, which is our industrial hub here in the Northern Beaches, it is only 16 kilometers away from the city.
Yeah, it's pretty cool.
Right, so that's pretty close.
Nice way to look at it.
Yeah, and also historically, we have a huge amount of people who live here who are tradies. So that demand is going to be higher anyway. Yeah, so that's 411 Ada, sold in 5 days, whatever that market is, right? And the owner still got the price that he wanted. It was above what he paid for.
Was it rented?
No, it was an owner-occupier.
Wow.
Yeah. So, I think like with things that are like acutely short in demand as well, then you've got owner occupiers who need to grow their business. They need that space. Then you've got the investor who knows it's a good investment because it's always going to get tenanted quickly. So you've got that two market.
Did that go up much in value from when it last sold?
I don't know off the top of my head, but I can tell you another example, which is...
Do you want me to bring it up?
You could, yeah.
I can bring it up.
Mark's got all the text, so he can do that.
Thank you for asking. I shall do it right now.
And then I'm just going to move quickly to, while Mark's doing that, 59 at 42 Wattle Road. We exchanged on that on Friday. Now, we sold that for $921,000. Same footprint, same size warehouse. It's a strata complex, sold in that complex back in January. So now we exchanged on Friday. We had the same size warehouse in the same building, sold in January. $800,000, right?
Yeah,
so
wow.
in about 11 months, you're looking at $121,000 growth. I mean, that was in that one
That's
particular
huge.
warehouse, and they had great agents, but
Good real estate agents. That was the secret.
yeah, but that's a 15% growth in less than a year. I mean, that is, that's
Monster.
in a commercial strata,
Huge.
complex. To tell me
So
that.
what was the ADA address? 411.
411 Ada.
Yep. Right. ADA. Let's have a look at that little puppy in Brookvale. Okay, here we go. So what did it just sell for?
720,000.
I'm going to bring this up, guys. I'm going to bring this up. This is cool.
And we're talking about commercial strata. There you go.
Here it goes. Here you go, beautiful people. Hopefully you can see that. That. So it sold in 2008 for 198,000.
Yeah.
So that's a whopper.
Yeah.
That's huge.
Yeah.
And so what did you just get now?
720,000.
Wow.
On a commercial property. So don't look at that capital growth in commercial property and go,
Wow. So there you go, 11 years, 3 months and 24 days. Yeah, that's a cracker.
It's just we are very, very short of stock for any warehouses that's actually around the $700,000 mark. I mean, we've got heaps of buyers looking for a warehouse like this. So if you've got something you want to sell, just call us.
That's it. That's a good one. That's a great example. So that was great capital growth along the way. So it went from 200 grand to 700 grand, went up $500,000 in 10, 11 years. And along the way, they got rent.
No, he was an owner-occupier.
Owner-occupier, so he wasn't even paying rent.
No, he got free rent and growth and grew his business.
But he was paying interest on 200,000, which was not a lot of money. Love it. That's a great example. Can you give me a resi one now?
Sure, Mark.
Commercial girl.
So we've got the fantastic Lisa Novak's property here, 46 Johnson Street.
Yes.
Yeah. So always shout out for the ladies. That's me. Anyway, Lisa just sold this off market.
Yep.
For 2.85 million.
Unbelievable.
Yeah. But wait till you hear about the growth, right? You think that number is unbelievable off market. Let's look back at what the owners actually paid for that property back in 2007. Yeah. So back in April 2007, they paid $1.25 million for this property in Freshwater. Okay.
That's incredible.
And just last week, would I be right, Mark? Just last week?
Last week.
Yeah, it's sold
on
for,
social.
Yeah, no marketing cost. No, $0 marketing, right?
Yep.
For $2.85 million. And not only that, am I right in saying that market sold in 5 hours?
Yep.
5 hours, $0 marketing. There you go. That's another fantastic real estate agent you need to call.
Do you want to bring this? Do you want to see this place?
Yeah.
I'll bring it up for you so you got it. Let me bring this little puppy up. So this house sold on social. Share. Okay, here we go. So this little puppy here, that's it here. There you go. Lovely house. So how much did that just get?
2.85 million.
Can we say $3 million?
Can I just say though, back to Freshwater, very tightly held area.
Yep.
Okay, low supply, high demand.
Got it.
There you go.
Okay, now here's a really nice graph. Look at this. I love one. Like, look at that. They bought that in 1998.
Yeah. Wow.
21 years ago, they bought that for $490,000, the people before that. Now, in 1995, look at that capital growth. In 3 years, it doubled. So for our Instagram people, I'm just going through, we're on Facebook showing some slides. So it went from 250 in 95 to 500,000 effectively in 98 to 1.25 7 years later in 2007 to almost $3 million today.
Now, if we look at that growth number from 207, so it's 1.25, right, to 2.85, which Lisa just sold last week, you're looking at 128% growth. 128.
So 100% growth is double. 128% is double plus
A fifth, more than a fifth, a third nearly, right?
Wow.
33% would be a third.
That's a monster.
It is. And you get to live there.
Okay. So where are we in this cycle? Everyone has an opinion like an arsehole. Where are we in this market? Are we at the top of the market? Are we at the bottom of the market? Are we at the bottom trying to get to the top, but there's no chance because of unemployment, because of Trump, because of Asia, because of this? Where are we? Now, we have no crystal ball. We are speculating, but we can share our experience with you, tell you what we've seen before. These other markets, we were operating in 1995 and 2000 and 2015. We can share that with you, and then you can make your own decision.
Yeah, and I think also, a cycle is a cycle. So wherever you sit in that cycle, whether it's 2007, whether it's 2010 after the GFC, right? Whether it's now, whether it was last year, if you got to look at the long-term game in property, yeah. If you're looking for just a quick
and all
return,
the experienced people, that's where they sit. They sit in that long-term play, don't they? They're not really like the give me the sugar hit, give me the, I need.
This is not like, Bitcoin.
Not Bitcoin.
Okay.
It's not Bitcoin. But these are the long, steady, tried, proven investors. They're the people that do really, really well. So the secret, I would say the fundamental secret is you've got to play the long game.
Yeah.
The long game when it comes to property.
And then where you are in the cycle after a period of 10 years, 20 years, 30 years, does it matter? We've just shown you the charts for this particular house in Freshwater. And the same with Ada, right? With the same with that commercial property there.
Okay. Now, if you're out there and you have got an address and you want to challenge us on the Northern Beaches to give us a bad example, I challenge you. Give me the address right now and I'll show you what it sold for 10 years ago or 20 years ago or both or 30 years ago. I challenge you. And that's how confident we are of our property market. And like you said, it's the whole cycle thing becomes a little bit irrelevant if you're a long-term person. But if you're looking for that sugar hit, you could get hurt.
Because we would have had a recession in the 80s.
Yep.
Yeah. And we had the GFC in 2010, right? 2009, 2010. So however you look at these charts, though, whether it's by suburb, whether it's by home, if you give it a 10-year run, it's still going to have come up.
We've had depressions. We've had recessions. We've had GFCs. We had GFC 2. We've had high interest rates. We've had low interest rates.
We've had credit crunch.
But we've had a lot of stock markets shit themselves. But the one fundamental thing is property just kept going. Just kept going, just kept going, just kept going. So now, whenever I report that, social media, there's the person that says, this reason, that reason. But I've always heard that white noise. I've always had that style of person commenting. I respect those people, but generally they've never been right. They've always been wrong. And property just keeps on rolling, rolls along. Can it keep going?
It's a cycle, right? Why not?
The cycle's not over?
No.
It's not Armageddon?
No, because the cycle goes up and it goes down, it comes back up again. That's what it is.
So it just keeps going?
Yeah.
It just keeps going. So we are in the bottom of the cycle, the top of the cycle?
I'd say we are in a acute shortage of stock cycle.
Okay.
Yeah.
Okay. Now, my favourite real estate person in Australia is the one Harry Triguboff. By luck, it's not luck, by virtue He is the wealthiest man in Australia. He's made his money from property. He said in January, we get an internal memo that comes across to us because we do a lot of business for Meriton. Having dinner with them tomorrow night. We may take out an award. Stay tuned. Yay. So he said January was the bottom of the property market. So a guy that's built 70,000 units, that's been in our property market for 60 or 70 years, has seen the highs, has seen the lows, has seen the highs, has seen the lows, it's like seen it all. He's coming back. He said it is the bottom of the property market in January. Here we are today, and by crikey, he got the last 8 months right.
And I would just add actually to that low supply as well, is that there's been a lot less developers putting in applications to build apartments, right?
Yeah.
So this doesn't hit us straight away because there's generally like a 2 to 3 year time lag, right?
Yes.
But demand for housing doesn't change because we still have the same number of people coming in to live in Sydney, whether that's by immigration or whatever it is, right? So that population growth doesn't change. It's still going to grow the way it does in 2 to 3 years' time. However, based on the lack of applications that have been put forward by developers because of the market in the last 6 months, in 2 to 3 years' time, we're going to find an even lower supply of homes.
The developers can't get the money. The developers can't get the sites. The developers aren't finding it economical to build stuff. And that pipe starts in 5 years or 3 years' time. Even if the lion got hungry today, the lion would not eat and give us developed stock for 3 years. It's a long pipe. In the meantime, property prices go up and up, and there's no stop.
Yeah.
Like Harry Triguboff says, we need new units. We need new units because we have population growth, and we need it to have affordable housing. They think you want it just because you want to make more money. Of course he does, but he's fundamentally right in what he's saying. We need new housing to keep prices real.
Yeah.
Affordable.
That's right, because otherwise you cannot get into the market.
That's a wrap. And that's a wrap. Anything else you want to finish off on, Ms. B?
No, it's just a privilege as an agent to be able to share things with people who share our passion.
Love property. Love it. And we are here 24/7 to help you. All you got to do is ask. So we genuinely love what we do. We genuinely love helping people. So, even real estate agents call us and ask us for advice regularly. Buyers, sellers, landlords that are not with us regularly, we're here to help.
Yeah. We just love talking about property.
Absolutely.
Yeah.
We mean it. All right. Thanks, B. Thanks, everyone. See you guys. Cheers. Hope we helped.